10:26 a.m. Pacific Standard Time. Today's date, 8/11 of 2012. We are in the dog days of August. One of the things that we're going to show people is that as a market maker in options, that we have a market maker school, and we want to show you what this call index volume is right now to current. But on the same token, we're going to want to show you where the put volume is. Now, when the call volume is high, everyone is buying lots of calls across the board, no matter what. And when the put, and this is called a put volume index, it's important that you understand at times that when people are buying at the very highest volume, they're very bearish about the market, and that markets go down. And then at times they start buying more put options in case the market wants to keep falling. But one of the things that we have seen through the whole topping process and the whole rally is there was a lot of puts being bought here. It's on 7/12. On this date right here on 7/19, okay, 7/17 actually, 7/18. All through here, we were increasing and people were buying a lot more puts on the put side. And when these things get imbalanced, directional movement in the broader indexes and stocks are going to happen as well. One of the other things that I'm going to show people is that both this call volume right now is diminishing as of 8/10. And what do I mean by that? We have less people buying calls here right now in this area. And on the same hand, if you take a look here, the high was 394, 344. If you take a look on the put side right here, let's get that reading. So on 8/10, you can see right here that this volume on its high was 398.21. So both sides of the current area is that they're starting to keep an elevated put side during this time frame. But when we get over here, they're buying less because it's going down. It's not shooting up. And same thing on the calls. The calls on this index, the call volume here is going down as well. It's diminishing. They're not gangbuster because it's the dog days of August. So there's going to be a market direction as we go up and hit the major resistance levels and all of the key indexes. Then we're going to look and see where the increase in the put side comes and the less call side buying at these major resistance levels in the broader market, and where the bigger part of that call volume and that put volume is. The other thing that I would like to show you here is what we call a put-call ratio index. You can see it right here that when these things get at certain levels, there's going to be a major change in these readings. If you want to learn more about it, because it's a little bit more advanced for part of our school environment, and we'll be teaching them a lot about that off of this video. However, that put to call ratio update will go under our options trading tab that you can find. Options. We have seeking liquidities. These are our special high frequency option trading routes that we have that you need to learn more about. Okay, you need to learn more about the high frequency volume, but what this really means. And when it gets lopsided or gets out of whack, you get market directions. Here's the option volume index chart right here. It says option volume index. Now look, let's take a look and see something here. It's diminishing in the month of August. We have a lower level of volume, okay, on the index volume. Okay, option index volume. Those are the index videos that we always trade using calls and puts for both sides of the market, and we'll be happy to let you know what those mean if you get involved in one of our programs, because this is more advanced. What I am saying is that we are getting close to a major turning point in the market when I look at this broader option market right here. Index options is what we're looking at right now. That's what we're looking at. And we're looking at these indexes because these indexes are very, very important readings. And what side of the markets we're peaking and when reversals will happen in key indexes. There is a great story here to learn. And it could take a lot of people will never learn it. Some people might learn it over a lot of years. We'll break it down where you can learn it in the first hour. That's what we'll do for you. And so MMTs, when we're not doing the video, this is going to be the charts that we're going to use, so you know, on the indexes now. And what we'll do also is we'll use the call volume on the stocks. And where the broader side of this call volume is being, what's going on, and where do we find it? We find it right here. That's stock option volume on stocks is what we're looking at in here on some of these readings. I'll have to blow that up, but it peaked in 2010, I can tell you. Down here, there isn't much going on in there, but when markets change, there'll be some readings that are important, okay? Some of these other indexes like the Philly and the CBOE, which we have the CBOE, that's called the Chicago Board of Options. Here's their volume, call, put call, everything that we're doing. But look at this put call volume. Look at the readings here. So once again, on these percent levels, I'll break these down what they mean based at major market tops. And there is a science behind the call and put ratio for when markets put in bottoms, and people are looking at why markets could go higher in indexes as well, is that there are a few people around the world who do know how to use these call and put spreads and where the imbalances are. We do it a different way, but we will teach you on each one of these options exchanges that they all have the volume. The CBOE, though, is the most important as far as understanding. If we want to use the total volume, which we can, and we will tell you, here is a call. Now, this is total volume. But there are some readings in here that we're going to teach you about when markets make tops and markets make bottoms and how far markets can go, okay, relative to S&P and call and put ratio. So once again, I'm going to conclude this put volume here is that it too, the volume on the put side is going down. That means that less fear. People don't feel the need to be on that side of the market, but then people aren't really committed to the call side either. So another way to look at this is by taking the fear indicator and looking at the put to call ratio, because the fear indicator, the VIX, and we look at that as well, even though that a lot of these high frequency models have changed it, but there's still a meaning. We are so complacent right now in the market volatility CBOE index, and it also tells a story here to me that we will do offline, MMT, in our next hourly segment of training.